Ever considered how your investment goals and risk tolerance could shape your financial future? Knowing your destination and how much turbulence you can stomach on the journey is crucial in crafting a balanced portfolio. Firstly, you need to choose a mix of asset classes. Stocks, bonds, and cash each have their own level of risk and potential for returns. Stocks can offer higher returns, but they also come with a higher risk. Bonds are a safer bet, but yield lower returns. Cash is the least risky, but also has the lowest returns. But merely choosing the asset classes is not enough. It's essential to diversify within these classes, spreading your investments across various sectors or companies. This way, if one sector underperforms, your entire portfolio doesn't take a hit. Now, here's where fractional shares come into play. Fractional shares enable you to invest in any stock or ETF, no matter its price. So, even if you don't have substantial capital to invest, you can still achieve your desired asset allocation. Picture a balanced portfolio with fractional shares like this: 40% in stocks, with allocations in S&P 500 ETF, Dow Jones Industrial Average ETF, and NASDAQ 100 ETF, 30% in bonds, spread between total US bond market ETF and corporate bond ETF, and the last 30% in cash, through a high-yield savings account or a money market fund. Of course, this allocation can be adjusted based on your personal investment goals and risk tolerance. A younger investor with a longer horizon might lean more towards stocks, while those nearing retirement might prefer more bonds and cash. Once you've decided on your allocation, fractional shares help you achieve it. Say you have $1,000 to invest, and you want to put 20% of it in the S&P 500 ETF. With fractional shares, you could buy 5 shares of the ETF. But the work doesn't stop there. It's important to rebalance your portfolio periodically, ensuring it stays aligned with your investment goals and risk tolerance. This may mean selling some of your winners and buying more of your losers to maintain your desired asset allocation. Here are a few tips for building a balanced portfolio with fractional shares. Start small. You don't need a hefty sum to start investing with fractional shares. Even a $10 monthly investment can start building a diversified portfolio. Invest regularly. Regular investment or dollar cost averaging is one of the best ways to reduce risk and maximize returns. Rebalance your portfolio periodically. As your investments change and grow, you'll need to rebalance to keep your desired asset allocation. And lastly, don't try to time the market. Predicting market movements is a fool's game. Instead, focus on long-term investment and building a diversified portfolio. Remember, a balanced portfolio with fractional shares is all about understanding your goals, diversifying your investments, using fractional shares to your advantage, and periodically rebalancing your portfolio. Happy investing!